So today's topic is Taiwan Semiconductor and their financial performance. They've had a record quarter, if you count their revenue in Taiwanese dollars and not US dollars, and I'll explain why. So Taiwan Semiconductor, TSMC, the biggest contract semiconductor fab manufacturer in the world. They make the high performance chips used by AMD, Apple, Broadcom, Nvidia, and then, Intel in the scheme of things. But every quarter, obviously like any public company, they announce their financials, and this quarter they've announced the 4Q 2022 numbers. Now, top of that list is revenue, which is represented in this chart here. Now, this shows that in Q4 2022, $19.93 billion revenue for the quarter, which is slightly down on the $20.23 billion of last quarter. Now, if you actually look at the Taiwan dollars, the currency they use in Taiwan, they're actually up to 625 billion from 613 billion. The reason why the Taiwan dollars is up and the US dollars is down is that the Taiwan dollar has actually been pretty strong against the US dollar lately, and we're at round about a 32-to-1 ratio as opposed to the 30-to-1 ratio which we've actually been over the last few quarters. That's what it's actually been like. So in terms of revenue numbers, from Taiwan's perspective, they're up. From the US perspective, they're down. However, on top of that, we look at the gross margins of the company, and we're actually hitting record highs of 62.2%, whereas last quarter we were 60.4%, and then last year we were about 52.7%. So we're seeing a 950 basis point or a 9.5% increase in their gross margins over the course of 12 months. That's pretty impressive for a contract manufacturer who typically needs to keep their fabs running at about 95% in order to actually make any money. So if we look at revenue, Q4 2022 to Q4 21, in Taiwanese dollars, it's actually up 42.8% from 438 billion to 625 billion, whereas in US dollars, it's only up 26.7% from 15.74 to 19.93. Again, that exchange rate is kind of compounding these numbers. And pretty much for any Taiwanese company that reports in US dollars alongside Taiwanese dollars, that's going to be a consistent theme, essentially through for the past 6 months and through to the next 6 months. Do a year-on-year comparison. Last year, 50% of the revenue from TSMC was built on leading-edge process nodes, what they call 7 nanometer and 5 nanometer. If we look 12 months on to Q4 22, then that number's still roughly the same, except it's about 54% now, weighted more towards 5 nanometer than 7 nanometer. That ratio used to be 23 to 27, 5 nanometer to 7 nanometer, and now it's 32 to 22, showcasing that shift of the demand of the industry to pay for the leading edge production nodes. Now we know that TSMC's been involved in some 3 nanometer, early production. We're not expecting revenue to actually hit these numbers until the middle of 2023. If we look at full year revenue, just in terms of US dollars, then TSMC in 2022 made 33.5% more money than it did in 2021. We're talking about a revenue for 56.8 billion US dollars to 75.88 billion US dollars, which actually marks the first time that TSMC has made more money than Intel in a given financial year. Gross margin in that time went from 51.6% up to 51.6 to 59.6, so that's an 8% increase, 800 basis points. And again, 7 nanometer in 2022 overall was 26% of revenue, and 5 nanometer was 22% of revenue. So there's still some shift, some mix going on as the year has progressed, and that's probably going to shift more towards 5 and then some to 3 by the end of 2023. This graph here that I'm showing you is also important. We're looking at the number of wafers that TSMC produces every quarter. Now, the number they give here is based on 12-inch wafer equivalents. So some of the older process nodes still are based on 8-inch wafers or 6-inch wafers, What they do is they take the comparative area and work out the equivalent number of 12-inch wafers that would be, and that's how we get these numbers. And if you look at the blue columns, we're seeing a slow, gradual increase in the number of wafers TSMC produces every quarter. Now, in the third quarter of 22, we actually hit that peak number, almost 4 million 12-inch wafers in that one quarter. For the fourth quarter of 22, that's actually come down to about 3.7 million. Part of the reason for that decrease has been the underutilization of 7 nanometer technology. There are some technology differences between 7 nanometer and 5 nanometer, which means that some of the machines can't be transferred over. So as a result, we're seeing some of that underutilization as the 7 nanometer orders have slowly been decreasing over time. However, if when you look at how many fabs TSMC has, and we typically call a gigafab a fab that produces over 100,000 wafers per month or 400,000 per quarter, we're essentially saying that TSMC has the equivalent of 10 gigafabs here. Now, the other metric on this graph that's also equally important is the red bar, and that is the average price per wafer across all of TSMC's portfolio. So whatever process node, what we're doing here is we're taking the full revenue and dividing it by the number of wafers produced by TSMC in that quarter. Now, there is some variation here because we're assuming that all revenue is manufacturing revenue. TSMC doesn't publish numbers on, say, its IP licensing or its packaging portfolio, not regular consistent numbers that we can plot. So this number is actually going to be a little bit higher. The amount average per wafer is going to be higher than it is actually in reality. But so we're seeing numbers, for example, this quarter of $5,384. It may be closer to 5,000, but this is going to be respective across the whole of this graph. What's important here, I think, is to point out that in the past 4 to 6 quarters, we're seeing a big increase from about $3,800 per wafer to $5,300 per wafer. Again, averaged across all of TSMC's process nodes. So that's including, the 10, 15, 17, 20K per wafer estimates we see for the leading edge, and the 1, 2, 3, 4K numbers that we see for the trailing edge, for the 45, for the 60, for the 90 nanometer portfolio. Fundamentally, we're seeing that TSMC is slowly increasing the amount of wafers it's producing. This quarter it's a bit down, but overall the price of those wafers are increasing considerably. The fact that it's happened over the last 6 quarters, and what we've plotted here is essentially the last 7 years, for the first few years that was fairly consistent. There's a minor dip in the second quarter of 2017, but overall it's been fairly consistent around the $3,000 to $3,600 per wafer. Now we're at $5,300, $5,400. That's a big increase. And the question on the street is that going to continue, especially as the more dense the leading edge process nodes, 3 nanometer, 2 nanometer, come online. So a side note about utilization here, other analysts are reporting that 7 nanometer, that in the middle of the pandemic was actually at 100% utilization or over 100% utilization. You do that because you calculate utilization without counting the downtime. So if you don't do maintenance and actually run the hardware, actually do the processing and get 100% utilization. However, some analysts are reporting that 7 nanometer utilization recently has been about 83%. So one might argue that TSMC might actually be losing money on 7 nanometer here. Overall, for the year, TSMC is producing about 14 million wafers. And recent reports, because TSMC doesn't produce exact numbers, is that we're seeing about 2 to 2.5 million of those wafers are on leading edge process nodes, 5 nanometer and 7 nanometer, which means that the rest, the sort of 12 million wafers, are on those legacy nodes, 16, 28, 40, 60. I've got a graph here that I can show you in a second. So the numbers that TSMC do provide show the percentage of revenue for each process node. If we take the percentage of revenue and the overall revenue of the company for a given quarter, we can actually plot how much each process node is bringing in revenue every quarter. And that's this graph here. At the top, we have that blue line showing 5 nanometer and the red line showing 7 nanometer. 6.4 billion for last quarter, 4.4 billion for 7 nanometer. And then 10 nanometer kind of died in 2020. but they'll be seeing 16, 28, 40, 65, and 90. So obviously we've got a record amount of revenue on 5 nanometer. 7 nanometer is a bit down for the reasons that I've said earlier. What's interesting here is that there are multiple legacy process nodes for which this current quarter, if not peak, is almost at peak revenue for the lifetime of that process node. So for example, 16 nanometer in purple, we're seeing $2.4 billion in the last quarter. Okay, so it had a couple of 2.4s, a couple of 2.5s over the past year. And the last time it was that much revenue from that process node was back in 2016 when it was the leading edge process node. For example, here, third quarter, 2016, 2.6, then 2.7 billion. We're now back up to 2.4 billion. For 28 nanometer, it's even a bigger skew. Current quarter for 28 nanometer, $2.2 billion for that process node. And since the numbers that I can go back to in 2015, it has never been that high. This is a record quarter for 28 nanometer, which just goes to show you where a lot of the demand in the semi industry is when we speak about there being still some tightness in supply for certain areas of the market. Automotive still want those controllers, still want the power modules, still want the specialty technologies built in 28 nanometer, and TSMC is, as a result, bringing in more revenue because the demand is higher, which means they can charge more. Similarly, 40, 45 nanometer, we're at 1.4 billion. That's also near its all-time high of 1.5 billion, which was only 6 months ago. And then 65 nanometer, again, another all-time high, and then 90 nanometer plus, which includes 110, 130. That's also almost near its all-time high. So across the board, TSMC is seeing both increased demand and able to increase the pricing on its process nodes. Because for some of these old process nodes, they're built with hardware that the hardware manufacturers just don't make anymore. There's no more 8-inch machines coming into their market. So they're not increasing the capacity of those nodes. They're just being able to charge more because that demand is there. So we don't know the exact average price of the wafers. This is a number that TSMC keeps very close to its chest. And I have to emphasize that this is also a number which changes based on the company. So if you're a company that only needs 20, 25 wafers, you may be spending 2 to 3x more than somebody with a bulk order who's committed millions and millions of dollars to buying chips or is helping with the early production cycle. The price range can be massive, but usually average wafer prices is a gauge that we like to do some comparisons. And we have some guesses about exactly how much each of these process nodes cost. And from that, we can also guess how many wafers are produced every month. And I've done some of these numbers for at least the leading edge process nodes, just so we can get a sense of what's happening here. So 5 nanometer, $6.4 billion in the quarter, and at an average of about $17,000 per wafer, which is kind of what the industry has been expecting. That equals about 375,000 wafers per quarter of 5 nanometer production. For 7 nanometer, that was $4.4 billion. And we are predicting a $10,000 per wafer average there. So we're looking at about 440,000 wafers for 7 nanometer in a given quarter. This 5 nanometer plus 7 nanometer, 375,000 plus the 440,000 means that about 815,000 wafers out of that 3.7 million are built on leading edge process nodes, or around 22% of TSMC's total volume. This goes along the lines of what we've been hearing about, the sort of 20 to 25% is always based on the leading edge. We may hear like something lower than that, 15, 16, 17%. Again, these are rough numbers. If the prices are up, then the percentage is actually lower. So take that as it is. It's just a rough guess. And then this is a popular graph showing the TSMC nodes as a percentage of overall revenue for the company, or at least production revenue for the company. And we see the green bar at the top with 5 nanometer, that's slowly been increasing over time, now 32% for the fourth quarter of 2022. The sort of pinkish bar showing 7 nanometer, that's increased and had a high of about 36% in 2020, just before 5 nanometer came out. That's slowly going down. And then we're seeing kind of all the other process nodes, it looks like they're decreasing. This graph kind of hides the fact that TSMC's overall revenue is increasing. And so actually we're seeing record numbers on a lot of these process nodes. It's interesting to see how the revenue is split up. I think it might be a more interesting point of comparison if we saw where the production percentage changes, just because this hides the fact that some of these nodes are showcasing record revenues. Overall, in 2022, all of the platforms that TSMC breaks down its customer base into, we're talking HPC, smartphone, automotive, IoT, they have all increased in their revenue spend over the year. HPC is up 60%, smartphone is up 28%, IoT up 47%, and automotive up 74%. However, revenue by platform on quarter-on-quarter basis is actually shifting more towards HPC. TSMC is saying that even with the downturn in the consumer market for PCs, the actual downturn is happening more on the smartphone side than it is on the computing side. Now, I should stress here, TSMC counts HPC, high-performance computing, as anything above a smartphone. So only laptop chips, desktop chips, not only server chips, and actual high-performance computing or GPUs. TSMC considers that all HPC. Everything else below that is either smartphone, IoT, automotive. So TSMC is seeing that increase in the computing segment rather than the smartphone segment, quarter on quarter. But year on year, everything is up. So as always with financial announcements, there is guidance on what these companies want to do in the next quarter, the next year. TSMC's guidance is actually fairly bad, or it looks fairly bad. We're seeing Q1 revenue is actually down 15% quarter on quarter. That's the prediction. And gross margins are coming down from 62% to more like 54.5%. So that's a massive 7 to 8% decrease. Long term, TSMC's target here is about a 53% gross margin. So right now, we're around that 62 mark. They think long term, it's more about 53%. That's where they're going to sit. Part of the reasons for this is the tax rate is going to be increasing. TSMC and Taiwan has had a number of tax breaks. Some of those are actually ending the end of 2022. Some have been put back in place for 23, but not all of them. So that means there's going to be a tax rate shift. R&D spend is also going to be increasing. They're saying it's increasing from 7.2% to 8.25% of revenue as more and more process nodes, leading edge process nodes come online and they're becoming more difficult. Obviously necessitates an increase in spend. However, on top of that, they're going to be decreasing their capital expenditure from about 36.3 billion to 32 to 36. That's what they expect through 23. And they say that 70% of this is for the advanced process, 20% is for the specialty process, so legacy nodes and features on legacy nodes, then another 10% for packaging. Overall, however, the revenue they expect for 23 is overall they're expecting it to trend higher. However, the first half of 23 will be down compared to the second half of 23. Second half of 23, they're expecting about $40 billion of revenue. So that's really where they expect the uptick in the market to be, given where it expects all of its customers to be in 6 to 12 months. A lot of these numbers take into account that the exchange rate between Taiwan dollars and US dollars is actually going to shift back in favor of US dollars. So right now it's about 32.5, 32.6. TSMC here is saying that's actually going to trend down to 30.7, which is actually going to affect some of these numbers. On top of that, we have to speak about 3 nanometer or N3. There was talk about N3E, the early version, or N3B as it's now being called, it seems. TSMC is expecting that more to ramp through the middle of the year. The company states that demand for N3 is strong and is expecting to be stronger than what N5 was back this time. The exact numbers they've said is that the company expects N3 will be mid-single digit revenue for 2023 overall, and N3 is to beat out N5 on the 3-year lagged revenue. So you have to think 12 quarters previous. TSMC expects N3 to beat N5 in that sort of 3-year comparison. Given the price premium, not sure what that means based on volume wafer shipments, because obviously if the price is up for 3 nanometer and the revenue is only slightly up, that means overall wafer shipments is going to be down, but we're going to have to wait and see if TSMC actually gives us any of these numbers. And then a final word about nodes beyond N3, so N2, 2 nanometer, or TSMC's first gate-all-around design. On the financial call, TSMC said that this is still on track. They said better than expected as well, with risk production in 2024 going to volume production in 2025. This is going to lag slightly behind Samsung, and we'll see how that reflects with Intel, because Intel's going to be going around that time as well. However, overall, the CEO says, there's no real change in the schedule here. They could try and pull it in, but they're not going to. They're just going to work through it as they would do normally with a new process node. Now, since these financials came out, we obviously know that Apple is going to be a lead 3nm customer. We also heard that Broadcom is also putting in orders for 3nm. The reports are that AMD's been reluctant to put in some 3nm orders, and then we're expecting also Intel to do some 3nm orders in there as well, and then obviously NVIDIA with massive GPUs on 3nm at some point as well. So overall, this has been a really good quarter and a really good year for TSMC. However, they are noting that the first half of 2023 is actually going to be a decrease for them, but overall they do expect in 2023 the business to increase by this time next year. So we'll see what happens.